Markets are hot. Hope you all had a great weekend. Welcome back to the channel. Putting GME next to the AMC chart, we have AMC on our left here and GME on the right, and there's some striking similarities between the two patterns. Massive breakouts on both. However, there are quite a few differences as well that I'd like to point out. But to begin, let's make note of the long-term support line on AMC that we've been following for the past couple weeks, guys. And if we extend the line on GameStop as well, there may be some type of long-term support forming around this range. Now, taking a measured move from the top to the bottom, although these stocks are performing very similarly, the biggest difference is the measured move itself. So taking it from the high of $20 on AMC all the way down to the low currently today, we're sitting at a 72% decline. Doing the same on GameStop now. High point all the way as high as $480. Down to our low of around 50 is a 90% red move to the downside. 70% versus 90%. That's a substantial difference. Doing the same from the bottoms now. From our local floor around $2 up to today, we're up about 150% on the past couple of months. And now on GME, a measured move of that caliber from around 19, let's call it 20, to about $50 is going to be a 200+% move compared to 150% from the floor on AMC, and that is precisely why I believe that AMC looks more attractive at these price levels compared to GameStop. Now turning on the VPVR indicators, this is a volume indication. There is some confluence around this area on GameStop. However, we don't see that forming. The point of control is much lower on AMC. That's something to be aware of going into the future, just in case we were to see some downside play out. And I think you guys would benefit to hear from a different perspective now. A perspective not of a trader, but of somebody who studied finance at university. It's my pleasure to welcome Mr. B to the channel.
Yes, thank you. Thank you for having me on. Yeah, I studied finance at university and would like to provide my perspective. Yes, thank you.
Thanks for your time, Mr. B. And how did you first hear about the GameStop fiasco?
It's actually funny. I have a roommate who asked me, had I heard about, what's happening with GameStop. I really hadn't heard much. I read a headline, but I'm not heavily into finance or stocks at this time. This has
Sure.
brought my attention. Like many people in our generation, we've learned about it through this GameStop situation.
Through the
We've become
mainstream media,
of course, like
primarily.
there's been a lot of coverage.
And as you know, our educational system doesn't do a good job at teaching us these concepts about risk management and tolerance.
And that's true. Yeah, I really didn't know what finance or stocks were until it came to going off to school. Um, it's kind
Right.
of happening behind the scenes until recently. It was very inaccessible to a lot of people.
Inaccessible, that's a good word for it. And that reminds me of the Robinhood fiasco. What's your opinion on the reaction that Robinhood put out for shutting down the everyday investors' trading capabilities?
I think it was a clear sign that they're not really working for their users. If they're taking a lot of money from the industry itself, then they're going to have some influence behind the scenes. You have to think about, are
Indeed.
they going to side with the users or their financial backers?
And I do believe that one of their biggest financial backings comes directly from Citadel Capital, which is a gigantic hedge fund. So is Robinhood really working for the everyday investor, or are they working for Citadel Capital?
Hey, you know what I think when it comes to this situation?
Do tell.
If you're giving away your data to these companies,
Mm-hmm.
then you are the product. Sure, the app is a good product, but you're also giving up a lot of your information. So you have to just, be aware of what's at stake here.
It goes beyond Robinhood, doesn't it? When
You
our
you
data becomes the commodity.
certainly, and you really don't know where it goes, or who it's being sold to, and to what end.
Exactly. It makes you wonder what they're doing with that trading information. And now, do you think the hedge funds are deliberately targeting these Wall Street bet stocks like GameStop and AMC?
I do think there was a fair amount of um, targeting here. It
Mhm.
was an approach that we've seen before. Um,
So you
I,
think
I, I
you think because that Citadel Capital was directly short GameStop that it benefits them to directly limit the buying pressure through Robinhood?
yeah,
Is that a fair assessment?
I think they were caught off guard. They didn't know what to expect. Nobody had seen anything like this before. There was a spike in demand on this
Hmm.
one stock, and a lot of Wall Street professionals were panicked. And Robinhood, the same audience that had new access to this stock and this trading platform, were cut off by their main means of trading the stock. And that's a clear signal um, to
Hmm.
maybe what's coming in the future. So,
Yeah, great point. And perhaps they were somewhat misguided or misled into that situation from the very beginning. Speaking of which,
yes,
we're expecting a lot of volatility tomorrow. So we're going to jump back into the charts now, guys. I appreciate you to hopping into the chat, Mr. B. Thanks so much for your time, and I will talk to you later. Happy trading. All right, guys. So now we're looking at our midterm chart here. This is a 4-hour chart that we've been watching, and I'm currently still waiting patiently for more patterns to form over the current week. But this is what I'm expecting in the near term here, is potentially an inverse head and shoulders type formation. Like so. And if I just adjust this long-term support slightly, I'll just bring it down to last Friday's price action. And that still looks pretty reasonable from that point. And we could see the price continue to bounce around this triangle throughout this week and hopefully break to the upside in the near term here. We do have our gap target still above $10. I'm expecting an extension as high as the 0.786, which could be up to around $12 range. For our day traders, Tuesday traders, there's a lot going on. Be careful when the markets open early on. Now just readjusting this to where we had it before. I hope that some of you were able to take advantage of the scalp opportunity that I pointed out from the last video. Take a look here, guys. I said that if we break down from the $5.65 point, that could be a nice little short scalp opportunity. And then I recommended hopping back in at the $5.50 long-term support for a ride back to the upside. If I go back to our current price action, you can see that that is exactly what played out. Right? Here's the $5.65 support. We broke below that juicy little scalp there. Could have pulled almost 3% move off of that. And now, where we're currently sitting, if I draw a trend line about here, touching multiple points, one, two, three, four, five, and potentially a breakout coming soon, okay? Going into Tuesday, early Tuesday, so I would not be surprised to see this open up green on Tuesday, guys. Be ready for that. Worst case scenario, if we do open red in the pre-market hours, let me remind you that we have support down at $5. And it could be a quick move down, a quick wick, and then back on up into bullish territory going into later next week. Lastly, guys, I want to zoom back out to our weekly chart. There seems to be a lot of confusion going on about the time frame on some of this squeeze action. Now, people in Wall Street bets have been talking about GameStop for over 6 months. It wasn't supposed to be a quick move. How fast and how high it did move caught a lot of people by surprise. And when in doubt, zoom out. So I like to go to the weekly chart and take a look at the bigger picture here. We have a gigantic volume spike on our weekly time frame, showing a lot of price action, a lot of new buyers coming in, a lot of people selling their profits. It's no surprise that we got a rejection when the weekly candle did close at this longer term moving average. Now we're sitting at our other longer term moving averages. And we also have a very strong long-term support about the $3.50 range. You can see it very clearly. I put a box right about there. Zooming even further out. I am looking at this as a falling wedge pattern on a significant time scale. And we have had a gigantic breakout already. And currently, we're not that far away from a nice entry. And that means that I do anticipate this to continue to the upside over the next few months even. I don't see us reaching the old all-time high within the month, but it is possible. Okay, it's unlikely, but it is possible. To just have a rough estimate at the type of time frame I would just take a guess on, okay, to help give you a better picture, that you may need to have some patience here, because the end of this arrow moving upwards is January 2022. But check back Wednesday for more AMC updates, and feel free to ask me questions down below in the comments. If it's urgent, best place to reach me is my Patreon, guys. Thanks. Happy trading. Have a great day.